welcome back. Big tech stocks in the spotlight after AI disruption fears rattled markets last week. Analysts calling it an AI scare trade. Others are arguing the sell-off is overdone. The industry's largest players, Google, Microsoft, Amazon, Meta, all investing some $650 billion in new AI infrastructure research and data centers. Investors weighing whether this spending wave signals confidence or a competitive pressure. Joining me now is Boosted.ai CEO, Josh Pantony. Josh, good to have you. Thanks very much for being here. What is
Fantastic to be here.
What is your reaction to this new scare on Wall Street that AI is going to have such a disruption for an increasing number of companies and sectors? That's what we saw, wealth creators, wealth management companies, software trade down last week, logistics as well as legal companies. Your thoughts?
Mm-hmm. Yeah, I think there's two major pressures, and I think they're both very early. I think number one, AI is going to increasingly make the cost of actually producing software basically approach zero. It's going to become like water. That's naturally going to create some commoditization and huge downward pressure on costing of things like SaaS software. And I think the other side, too, that people are still a little bit underestimating is AI is going to make the sort of data creation and insight creation process also a lot cheaper than it was historically. So I think the market's starting to wake up to this, but I think we're actually in very early innings in terms of it actually impacting gross margins and ultimately impacting revenue. And so I think they'll be very disruptive over the next few years.
Josh, we're just learning this morning that Saudi-based Humane announced a $3 billion investment in XAI. You're seeing what people are calling circular deals. How would you assess some of these circular deals in terms of NVIDIA investing in OpenAI, using chips, and OpenAI would use NVIDIA chips? Your thoughts?
Yeah, I think it's both true. There's going to be absolutely massive disruption in the software space. I would also say that it's a little bit early in terms of knowing who the winners of AI are actually going to be. I think there will be a few consolidations that end up capturing a lot of this space. But to the point that you were making, there's definitely been a little bit of behavior kind of similar to what you would have seen in the late 90s with some of the large investments going in. I think the biggest trick with infrastructure is it's just hard to know when. There will be huge disruption driven by AI. There will be huge economics driven by AI. But AI is also seeing downward margin compression. And getting the timing wrong can also be problematic, even as an AI company.
Mike Lee?
Yeah, so AI, look, you're taking data, and particularly the large models that we hear about out there are particularly awful in terms of math, investment prediction. At what point do you think things are going to turn the corner and there's going to be real predictive value for investing in using artificial intelligence to make investing decisions?
Yeah, so on the math front, LMs are still not phenomenal at thinking through math in a way that a human would, but they're getting really, really good at producing software that can do calculations and producing software that can do calculations on the fly. So I think that side of the equation, it's already gotten to the point where it can be fairly valuable. I think the other way that I like to think about it is classically AI in finance really could only think about short-term investing. You're thinking second to second, minute to minute, hour to hour, that kind of stuff. The long-term modeling of financial processes tended to be driven by human processes, and I think that's an area AI has actually gotten pretty good at this year too. And again, very early innings in terms of what the actual implications for that are.
So we've been talking about jobs all morning as well, and lots of people are expecting that AI is going to impact white-collar jobs. We were talking about what the CEO of Anthropic said, the CEO of Microsoft AI. Where are you on that in terms of AI perhaps replacing 50% of white-collar jobs within 1 to 5 years, is what the CEO of Anthropic said?
I think there's going to be massive changes in the labor force. But that doesn't mean that you necessarily wipe out all positions. I think there will just be new bottlenecks. For what it's worth, we actually think the biggest set of bottlenecks will be human-to-human interactions. And so a lot of manual work where I'm spending time on a spreadsheet, where I'm trying to write a report, that probably gets automated by AI. But parts of the job that involve a human interacting with another human, that actually becomes more important as time goes on. And so the way I kind of think about it is there will probably be disruption in terms of what your job entails, but I would expect in 5 years there'll be just as many jobs as there are today.
And tell us about your company as you try to redefine investing in all of this for advanced users and beginners using AI to meet business needs.
Yeah, so a lot of the value we provide is basically creating these agents that can automate different parts of the investment process. If you're really experienced in a large buy-side hedge fund, that could be work like helping you build out a financial model. That could be work like helping you understand which parts of earnings seasons are having the biggest impact on your portfolio. If you're a retail investor, it could be something more related to helping you get started and thinking through what's happening in the world and maybe helping you take some of your financial objectives and turn them into actionable ideas.
Would you use this, the investors at the table? Would you use AI in terms of investment ideas?
Yeah, absolutely. In terms of coming together with research, figuring things out, I'm still unconvinced as to the predictive value. But in terms of putting things together and reducing time, I use a competitor of yours, Deepvest AI, like every day. I don't know that they're necessarily a competitor, but this is becoming a very crowded space, which I think is good for the financial advisor like me, the institutional investor, the average investor, because it's really putting together information to improve your odds, because I don't think we're there yet in terms of the predictive value.
Yeah. The way I like to think about it is a lot of these tools were classically only in the range for, extreme professionals. I think AI is really going to level the playing field. There's a lot of software and data sets that once you had to be a hedge fund with billions of dollars to access, that everyday people will be able to access. So I think you're right to think about it as more of a tool and more of a research mechanism as opposed to a predictive engine. But those kinds of insights are going to be very valuable because a lot of people did not have access to them before.
All right, we will leave it there. Josh, great to have you this morning. Thank you. Josh Pantony joining us there. We appreciate it.